Good morning, everybody. This is John Heerdink. I am the founding and managing member of Tribe Public. Thank you again for joining us, and I look forward to having many more of these sessions and events with leaders of industry like we have today, and Brad Hansen, who is the CEO and founder of an exciting company in the clean energy space or solar energy that has a unique offering he's going to take us through, and his company is called Holu Hou Energy. It's a private company, and it's exciting as they've started to roll out their very unique offering for multi-dwelling units and a virtually untapped area of solar energy, believe it or not, that it hasn't been deployed. And he has this unique offering that he's going to tell you about today to get us all even further excited. So thank you, Brad, for joining us. Note that I am, again, in addition, as Tribe Public, we look to get the leaders of industries on Tribe events, either locally, via primarily luncheon events where they come out and speak, provide a brilliant lunch and tell us their story. These are NYC and NASDAQ listed companies, as well as private companies. And they are companies meant to be that you care about. So people join the tribe. It's free, as you know, and you express your interest in getting in front of these leaders to learn more from them and maybe consider investing in them or otherwise. And it's meant to be a process that's shared and that, in a sense, about the companies you care about, not just about companies I care about. I'm many times an owner in the company. I run a registered investment advisor also called Vista Partners, the website vistapglobal.com. And our website, as you know, at Tribe Public is tribepublic.com, TRIBE public.com. Please review my disclaimers that I have on both sites, as many times I'm an owner. And in this case, I'm a minority owner in Holu Hou Energy through an indirect investment, and another company has a minority interest in them. And I also am actively seeking to find business development opportunities because I'm completely excited about what Brad's offering to these owners of MDUs. And so enough said about that. Brad, if you will introduce yourself and maybe tell us a little bit about your background and what brought you here today to found Holu Hou Energy, and maybe we'll start with that.
Okay, great. Thanks, John, and thank you for everybody that's joined today. I started my career at Boeing as an engineer doing power electronics for space and aerospace. After that, I went to a company called Applied Materials that a lot of you have probably heard about. They're the largest company in the world producing semiconductor manufacturing equipment. And I was executive vice president at Applied Materials and ran a couple of the product business groups while there. For about the last 15 years, I've been back in my roots doing power electronics and energy storage systems. And as part of a small team, formed Holu Hou Energy to address what was really an untapped market for solar energy in the US and really the world in 2019, and that was multi-dwelling unit properties. So that's what brings us here today, and very excited to be able to share what we're doing and some of the results of what we're doing with all of you.
Thank you, Brad. Look forward to learning more as we move forward. And I've known you for a few years and excited to see your career advance. And I know a lot of other folks, including some that I've seen on the event today, are also excited about working with you in the past and also working with you now at HHE. You have a video that you've created as a company. It's a quick one. I would suggest that we watch that today. If you could pull that up, I think it'll give us all a great and better understanding of what the offering is and the potential.
Sure. Be happy to do that. Is that, can you see my screen?
Yep, we're good.
familiar with this? This is what a lot of California looks like. Or this. Or this. Homeowners in our sunny climate can install solar panels on their single-family homes and can live the dream of living off sustainable power, as well as paying less in their electricity bills. But what about these buildings? This is what many Californians live in. These multi-dwelling units, like apartment buildings and duplexes, house much of California's rental population. But if most of Californians are renters, how do we get these buildings to go solar as well? Right now, most multi-dwelling units do not have solar energy installed for two main reasons. Reason number one, most of the units in these buildings use a small amount of electricity compared to single-family homes. This makes it very difficult to size a system where electricity supplied matches tenant usage throughout the daytime. Also, you may have tenant changes in a unit where a high usage tenant is there 1 month and a low usage tenant the next. So how do you size a system for this? Because of utility rate structure changes in California, you don't want to install solar without batteries, but a battery per unit would be cost prohibitive. Now for the second question. What is the incentive for building owners to install solar in the first place? Sure, we love to live in a world where building owners install solar out of the goodness of their own hearts. But ultimately, homeowners install solar panels to save on electricity bills and offset some of the cost of installation. So for building owners, it's more complicated than that. Let's answer the first question. How do you economically install solar for each unit, even though tenants may change or use more without breaking the bank on batteries? The good news is this technology exists now, and it's literally why we're in this video. Holu Hou is a multi-dwelling unit energy system that makes it possible for buildings such as apartment buildings and duplexes to generate, store, and record energy on a per unit basis. So how does it work? 4 to 6 units are linked together in small groups or clusters. This helps you size to the anticipated usage of the entire cluster, not the individual units. Solar power supplies the majority of demand for each unit, and any excess energy charges the unit's energy storage battery. Once a battery is full, surplus generation is made available for other units in the energy cluster. So every unit is working together to ensure every kilowatt of solar electricity is utilized. All of this is monitored and recorded by revenue-accurate meters for billing, just like the power company. Now for the second question. What is the incentive for building owners to install solar in their buildings in the first place? With solar generated in the building, tenants can pay building owners for their utilities instead of utility companies. Revenues from this can be reinvested into the property instead of sending off that money to the power company to do whatever utility companies do with their money. This technology also works on low-income housing, so everyone can go solar. This ain't just for luxury housing. Everyone pays utilities, so why not keep that money in the building? Just to give you a sense of scale, let's go through the numbers of how much money you'd be localizing. Basically, what's going from the utility company to the multi-dwelling unit property. Let's take a property, say 160 units with 2 floors built in the 70s. That will take 27 Holu Hou Energy clusters. With the solar and battery storage in the energy clusters, the building will generate 1,000 megawatt hours of energy per year. Over the life of the system, this will generate almost $11 million for the building. So for people and companies that own multiple properties, that can add up. Plus, the government offers plenty of incentives to install solar. So there are plenty of ways to cut down on the initial cost of installation. Property owners can promise their tenants that they are providing them sustainable, eco-friendly housing with a high level of resiliency. What is resiliency? In this case, making power at home makes your building resilient to problems with the power grid. In a time with frequent blackouts and unpredictable conditions, many Californians are looking for ways to not only help the environment, but also continue normalcy despite it. While the power grid might be getting greener, the source of your power might not be totally green. With a solar system on the property, not only you guarantee your power is green, but you're also skipping steps from having to transport solar from some solar plants in the desert. That's where the animals live. Or somewhere in the Central Valley where they replaced a farm that fed people. I mean, this is California. You like to shop local and eat food grown locally. Why not have your electricity be local as well? Regardless of your reason to go solar, whether it be the mortal danger we are in due to climate change, or because you love fat stacks of cash, we can all agree that Holu Hou presents an innovative new option to power California in the green way we all deserve.
Well, thank you, Brad. Well, she got me excited. I saw that video before, of course, but well done on that, at least in my opinion. And I mean, I definitely hear the local message over and over again on that. But at the same time, I'm hearing profitability, money back in the pocket, and to either invest in the MDU units or to put it as another revenue source for MDU owners, or some combination, whatever makes sense, I guess, at the end of the day. That's not me. That's somebody else, but I think that seems potentially very exciting. Did you want to say anything just after that video before we pull up your PowerPoint, or how would you like to proceed?
Yeah, I think we'll go into the PowerPoint, and included in the PowerPoint, I have just an example of the type of proposal package that we start a conversation with a building owner, so everyone will kind of get a feel for what this looks like with respect to the economics. And I think the video provides a good foundation for the discussion that follows, so I hope everyone found it useful. Okay, so I'm going to go back into sharing and go into my presentation.
Yeah, looks great.
Okay. By the way, the photo that is in this presentation cover slide is the first project that we did. It's Kauai on the island of Kauai, and it's a 135 unit low-income housing community. And you know, rental properties have been notoriously difficult to get solar onto for the reasons that I'll discuss, but low-income housing's been even harder to address, and those are a lot of the times they're very, very low usage tenants, and you just can't economically get solar onto them. Well, what our solution does is also able to be installed on properties like Kauai that were shown on this that's shown on this slide. So why is the
Hey, Brad, sorry to interrupt. Just a reminder, folks, that there is, we've got a number of you have sent in questions that we're going to address at the end of this. But if you think of any along the way, there's a Zoom chat feature, Q&A. Feel comfortable in sending those at any point, and then we'll try to address that in, if the time permits, along with the other questions already submitted. So again, go ahead, Brad.
Okay, great. So why is the multi-dwelling unit property market important for the solar industry? Well, basically because multi-dwelling unit properties are about 1/3 of the existing housing stock in any metropolitan or reasonably populated area of the country. And for California, that's 3 million units of housing stock, just legacy housing stock. Hawaii, it's 200,000 units as another example. So it's a significant portion of the housing stock in any state, and it's basically untapped with respect to solar penetration. Now, anybody can look in the area that they live in and see where the new construction is going, and a lot of it is multi-dwelling unit. It's probably well north of this 1/3 that's the legacy stock. It's an unpenetrated market. If you see solar on these types of facilities, chances are it's on the community centers where there's a large enough and predictable load, electricity load, that they can put solar on those facilities and it will actually do something to offset those bills. The pictures on the right of this slide are illustrative of what I'm talking about. So the top right, a lot of us have been to this property, is Santana Row. In 2002, this property was constructed, and the key about this was it sort of set a template for what new construction started to look like in Northern California, in the whole Bay Area. Almost every community in the Bay Area has their version of a, quote, Santana Row, unquote. It happens to be mixed-use housing, commercial residential housing. So this is a huge trend in new construction. None of that has solar. The bottom right is what is representative that you would see if you go around any populated area in California, but also most of the other states. What you see in that picture is the Highway 17 corridor through Campbell, California. And all of these buildings are multi-dwelling unit on both sides of the freeway. What you won't see on any of those rooftops is a solar panel. There's just nothing there. So again, a huge potential opportunity, huge potential to make lives of a different set of people that enjoy solar today, impact their lives in a positive direction, give them resiliency, maybe a little bit of savings. I should say there is some community solar out there, but those in a state like California, those typically tend to be master metered properties where the tenants don't have their own meters, and they tend to be low income. So those do exist, but it's a very, very small amount in aggregate. From a market size perspective, multi-dwelling unit is for sure bigger than the commercial market for solar, commercial building market, and probably bigger than the residential market, and maybe bigger than both put together. So a massive opportunity measured in tens of billions of dollars just in California. So that kind of begs the question, why isn't there any solar on these properties? Well, the video alluded to some of that. Everybody knows the peak generation of solar is during one part of the day, and a lot of the peak usage is during a totally different part of the day. So you have this mismatch that just exists with solar electricity. The lighter the usage of a customer, the harder it is to deal with that mismatch. So you think about rental properties, 1 bedroom, 2 bedroom, even 3 bedroom units. It's almost possible to even match generation to load in any fashion from a time of day perspective. The second problem also that was in the video, and this is really the killer, is tenant churn and load churn. So you think about a rental unit, you can get a high usage family of 3 in a unit 1 month. The next month they may move out. The month after that, the unit might be empty. And then the month after that, a single person moves into that unit that doesn't use a lot of electricity. So how do you ever deal with that variability in usage when you're trying to size a system? Of course, you could physically put solar on, but the economics will never, ever pencil out. So that's why there isn't any. And then, as the video said, there's a second part that goes beyond the tenants, which is, no building owner really does this out of the goodness of their heart. They want to know what's in it for them. Can they make some money in the process? Why should they do it? You have to give them a compelling reason to want to do it. So these are all the things that our EnergyCluster solution addresses. what does it look like? It's basically battery and a set of power electronics. And one of those pieces of power electronics is a hybrid PCS. Then there's a modular energy controller, which is the brains of the system, and also the communications to our cloud. And then key is there's what we call the energy share module. These are the modules that are connected to each other in a cluster. So each unit has everything that I'm showing on here, with the exception of sometimes batteries, depending on the load. You could put either 0 to 4 batteries on any given unit, but all the power electronics modules exist on every tenant unit. Then the energy share modules are interconnected to each other. That's what moves the electricity, moves the power between the units. So what does it look like on a real building? This happens to be our first generation product, but it basically looks similar. This is the Koa'e building in Hawaii. And on this property, every tenant unit, 135 units, has solar electricity. And we address on that property about 60% of the overall load, meaning they still have a utility connection that is responsible for about 40% of the electricity. So what I wanted to show on this slide is I really wanted to illustrate the tenant variability problem and why it's real. So I don't know if everybody can read it, but these are 3 buildings in that property during the month of May. So this is the May data for those 3 buildings. Each of the 3 buildings is in a 6-unit cluster. So when I say cluster, we do 4 to 6 units interconnected together. And with 6 units, we can maximize the benefits of the sharing. So we don't need to connect every unit in a facility, just 4 to 6 units in each cluster. And the interconnection is all behind their respective meters. So we're not outside the meter, we're behind their meters. And so what this shows is on the top building, you have an average across that building. Sorry, my sharing pictures over the top of the slide, but the average for the month of May was about 20 kilowatt hours of usage per day. If you just aggregate the 6 units and divide by 6, that's what they used. But if you look at the individual units, you've got one tenant that used under 6 kilowatt hours per day, if my memory serves me correctly. And you've got another one that used 10 times that much. So it shows the challenge of how do you deal with this from a sizing standpoint? And the answer is you can't in a traditional approach. So this is the nut that we crack with the EnergyCluster, because the units will share, let's say, the unit that has 5 kilowatt hours of usage or 6 kilowatt hours of usage, maybe they're not there, but they have their own solar, they're over generating for their load. So where does that go? It goes out and gets consumed by other units that need it, like the one that's using 10 times that much. So it's a very efficient and modular deployment approach for renewables. This has been in commercial operation, by the way, for 2.5 years at this site, and is owned under a third-party PPA by actually the utility in Hawaii, Hawaiian Electric. So this is kind of just a slide to show you what really is going on. I showed you that month of data. This is an hour snapshot of data, and it shows the 6 units in cluster real data for that 1 hour period of time. And at any given time, some units are exporting watts and some units are importing watts from the cluster to varying degrees. And it just shows you which units are doing what for that hour. And it all happens real time. It's active control. Doesn't happen with writing a bunch of software algorithms. I won't get into the weeds of the technology, but our approach is very scalable and isn't subject to a team of 100 software people in India or someplace writing algorithms for us. So the other thing that happened about 2.5 years ago, actually about 3 years ago, is we got into some discussions with a company called Lend-Lease. Now, Lend-Lease has the contract to operate the base housing communities for the Army and the Air Force in Hawaii. They also have some of them in other states, but they have the contract for 9 bases in Hawaii, base housing communities. And they had a big problem where they wanted to put renewables on their properties, but they couldn't because they can't export power out to the grid. The grid is not robust enough there to be able to handle exporting power. But they also couldn't put a battery or a set of batteries on every single unit with solar because the economics would have been horrible. So they heard about what we were doing again 3 years ago and started discussing with us the possibility of putting solar and our solution on one of their properties. So about a year and a half ago, we deployed a pilot project at one of their communities called Aliamanu and collected a year of data on that pilot to demonstrate that what we said we could do, we could do on their property. During this whole time, we were in discussions about building out this across all of their properties in Hawaii. And this all, of course, this Island Palm communities, these 9 housing communities are a joint venture between the Armed Services and Lend-Lease. So of course, this all had to go through the Pentagon and get vetted, and our solution had to get vetted. We had to get vetted. So all of that was taking place in the background. Well, in March, we signed the power purchase agreement to do the build out across all of their properties, all of the communities in Hawaii. So this slide just shows you where those are and how many people are at how many units, residential units are at each of those communities. There's a total of about, I think it's around 10,000 people. We think about 6,000 units are solar capable in that 10,000. So again, this is just to say that we're not a startup. This is not a product idea. This is commercial, and it had to go all the way through the Pentagon and get approved at the highest level there. And so this in aggregate across these communities is the largest residential solar project in the United States. We've already ordered the long lead material, and we start construction on this project in the next 3 to 4 weeks. It'll likely take 3 to 4 years to do the build out. So what does it look like when we model out a property for a property owner? I just wanted to give you an example of what that looks like. This is a property in El Cajon, California that we modeled out, and with the idea we could show them exactly what things would look like at their property. So we start with doing a helioscope, and what that does is it essentially tells us how much power we can generate off of the solar on their rooftop. And that pinpoints their location. So it takes into account their cloud cover, the number of sun hours that that location has per year, et cetera. And that allows you to really see how much power can I generate, right? It all starts with how much power can that real estate that's available to me generate, whether it's rooftops, carports, rooftops and carports. We look at everything that's available as in the way of real estate. This property is 338 tenant units. We could generate quite a bit of power from the location, 1,905 megawatt hours a year of PV production. And then we take a look at how many energy clusters and how would we design the energy clusters? What is the estimated tenant load amount, et cetera? And we calculate roughly how much of that site's estimated electricity consumption a year could be offset, could be taken by the property developer with the system. Sometimes there's trees. We say we'd have to trim back trees to get this output. We just let them know. Then we give them this, which is, this shows the actual cash generated by the system that we're talking about. And it shows it before and after tax credit and depreciation. So we do a 25-year lifetime product. And so it shows the cash flows after 25 years. And what you can see in the green section on the left is this is the annual cash flow that comes from these assets and goes to the property owner. And if you divide that $628,000 by 12, you get the monthly cash flows that are coming in from these assets. Most of the owners of these properties pay tax and can take the tax credit. That's real money and real offset. And most of them pay depreciation. So when you take the price and net out the ITC and the depreciation, in this particular case, it's $3.56 million to put this system on. But it's generating $20 million of cash over the life of the system. And you think about, that's just a 338 unit property. How else would a property owner generate $20 million of cash? What could they do with that property? And the answer is nothing short of raising rates that would generate that much cash. We can generate bills that go directly to the tenants and take care of all of that for the property developer. The property developer, this is their full wallet. This is the economics of the installation. They can choose to give some of that back to the tenant. That's their choice. So when we do the proposal, we're really just showing them, this is the cash that can be generated. This is your decision what to do with this cash. You know, of course, a lot of them are going to want to give some back to the tenants. And the tenants get resiliency. So that's part of what the tenants get. And this just shows the cumulative cash flow for the installation. So this is just an example that shows a real property, a real proposal that we did for a real customer. So just wrapping up, why do we matter? Why does the energy cluster matter? It really matters because everybody's been trying to crack the MDU market for years. Nobody can figure out how to really address it economically. There's approaches dabbling around the fringes. Some people, like I said, putting solar on their community centers really doesn't do much for economics, doesn't do anything for the tenants, really. MDUs make up a huge portion of the housing stock, but it's also a global opportunity. So if you look at that picture I showed of Santana Row, when I first saw that, because I lived in that area, like, wow, this looks like what I've seen in Germany. This looks like what I've seen when I travel to France. Those types of mixed use commercial residential facilities, properties are everywhere. The market's worth tens of billions of dollars, probably 40 billion alone in California. So it's a huge opportunity. And there's nothing else like what we have in the market. And so at this time, we're fully differentiated.
Got it. Well, thank you.
Lastly, you get local control of the dollars spent on electricity. Those are in the hands of the property owner. And the property owner can, in the case of the Hawaii properties I showed with Lend Lease, they're going to put all that money back into amenities for the service people and their families in the community. That's what they're going to do with it. They're not going to put it into their pockets. They're going to reinvest it into the communities. So it's up to the property owner, but it's much better to have that locally than some faceless utility someplace. Anyway, that's the end of the formal presentation. I really want to thank everybody for listening. And I guess, John, we can take some Q&As.
Thank you. We have a few Q&As we can try to go through. One came up during there that maybe you can address quickly. It says, couldn't the cluster store the excess power generated from the photovoltaic cells in the batteries?
Well, they do. But what happens when the batteries are full in a given unit? So if you've got a battery on a unit and the tenant leaves, the battery is full, and you're either going to curtail that solar or you're going to export that solar. If you export that solar, if you can even get a permit anymore to export it, you're going to get paid about 6 to 8 cents a kilowatt hour in California, and in Hawaii, 10 cents. But again, in Hawaii, in some cases, like on Kauai, you can't export. They won't let you. So yeah, you could just keep putting batteries on that, but then you'd ruin the economics.
Got it. Thank you, Brad. The next question is, how does the HHE approach compare to virtual net metering?
Yeah, I think a lot of people ask us this question. Virtual net metering, it's been talked about a lot. It hasn't been deployed very much, but it effectively puts the generation, any solar generation, and possibly energy storage outside the tenant meters. And then you permit that with the utility under a certain tariff called virtual net metering. And so anything that's not consumed by the tenants goes back to the grid and gets compensated at the tariff that's the virtual net metering tariff. The problem being, first of all, the utility permitting of those takes a long time. The second problem being that the compensation under virtual net metering is basically getting severely ratcheted down in California, for example. So they just published a new set of rules for virtual net metering in California. I actually have a slide on it because I get this question a lot. So this is taking the economic value of what we do on a gigawatt hour of electricity production in a year versus the same value for that virtual net metering under that tariff for the same amount of electricity in a year. And what the utility is doing and the PUC is doing is initially they're going to give you a little bit of an adder on top of avoided utility generation costs. And then they're going to step that down severely. So you can see that orange line and how it steps down in SDG&E territory, San Diego Gas and Electric territory. And so you can just see that from an economic standpoint, in the two tariffs, they're at virtual net metering is at avoided utility generation costs. We're at avoided retail electricity rate cost for the tenants. So retail rates just keep going up and up. So ours is going to go up for 25 years at some escalator, some increase, because the rates always go up, while virtual net metering is getting stepped down significantly. So just from a pure economics standpoint, it's not as good of a solution. But also you think about, if you have to put a big battery or big central solar system on a property, how do you do it on a property like this? Where are you going to put a central solar and battery system? I had somebody say, well, we'll just put it in a field nearby. I'm like, there's no fields nearby. What are you talking about? So there's a lot of reasons, from permitting to really just pure economics, that our solution just works much better.
Gotcha. Question along this is, one is, are there any competitors? And two, you've shown what some have assumed as the best case scenario in Hawaii location, but does this work in places like Memphis, or weather conditions may be different? How do you see that?
Yeah, that's a good question, actually. So this property is in El Cajon, as I said. El Cajon actually has way better sun than Hawaii. And most of California has better sun than Hawaii. Hawaii gets a lot of cloud cover, a lot of marine layer. You can go 3 cloudy days in a row in Hawaii. So if you just look at the sun hours, California is much better than Hawaii. And Kauai is actually one of the worst places in Hawaii. So it can work. In the final analysis, the economics are driven by avoided retail rate of electricity, right? Because you're taking what would have been paid to the utility at retail rate, and you're putting that same amount of money in the owner's pocket. That's what they have to work with from an economic standpoint.
Got it.
You can charge tenants retail electricity rate if you want. It's up to the discretion of the building owner. So really, you're limited by two things, or the economics are bounded by two things. Number one is what are the prevailing retail electricity rates where you're at? And the second is how much real estate is available on the roof or carports. At the end of the day, you have to generate electricity with solar modules. So those are really what is the boundary conditions for the economics that you have to work with. And those change. Obviously, California and Hawaii are at one end of that spectrum. By the way, San Diego is worse than Hawaii. From a lot of people don't know that, but the electricity rates are worse in San Diego than Hawaii. Everybody thinks Hawaii is the worst in the country. San Diego is worse than Hawaii. The Northeast is bad, but then you have to look at the amount of solar you can generate on that property. So again, you got to look at prevailing retail rate and the real estate you're working with. And we can model all that out. That's exactly what this helioscope is doing.
And then can you confirm again what the competitive question? Are there competitors when you go?
There's no competitor at this point doing what we're doing. It doesn't mean that that'll be the case 5 years, 6 years, 7 years from now. But I didn't want to go into the product nuances because that's kind of a separate discussion. But we didn't just wake up and do this one day. Our entire engineering team has been doing DC microgrid systems for 15 years. And so you need a lot of competency in that area to create the product. And once you create the product, you've got to go field it and correct issues that are going to come up. Well, we corrected the issues that would come up on our product a decade ago doing commercial systems. So
okay.
Maybe in 4 or 5 years.
Got it. All right. Right now, by the way, do you act as a developer too, or do you sub out that to a developer local to the project? And
Yes.
Okay, so you sub it out. That's
no, we do both in Hawaii. Even in Hawaii, we do both. So we have projects in our pipeline that developers have brought to us and said, hey, can we install your solution? We have one that's more than 300 units. And we said, yeah, we'll engineer it and sell you the product and you can install it. They brought us that opportunity. In California, it'll be the same thing. You know, we're actively developing opportunities, but we've also been approached by developers and said, hey, could we use your product to do this? And say, yeah, let's look at that site.
Okay. Here's a question. Are all your MDUs using DC?
Our system uses a DC backbone. The unit itself uses the AC power that a rental unit uses. So part of the power electronics modules that I showed was a module that converts the DC to the AC for that unit. But solar is DC, the storage is DC, the connection between units is DC. All of that backbone is DC, but it gets converted to usable AC for each unit.
Got it. Back on the financing side, who finances these projects?
That's a very good question. And the answer is, it depends. Some owners of properties don't want to own the assets. Some of them just want to do it under something like a power purchase agreement. And, you know, they want to make a little bit of money from the system. But you need a third-party financing to come in and do that PPA. And so the owner of the PPA actually owns the assets, but the PPA is at a certain electricity rate that will give the owner some money. So that's one way to do it. That doesn't mean the owner finances it or even owns the assets. In some cases, the owners want to own the assets, but they can go out and if they want to get financing to own the assets, they can go get financing. Like they already own they have avenues to financing. They own an MDU property, just like they might go get financing to re-roof or upgrade units or something like that. So it really depends on the property owner. and our model's flexible to deal with what they want to do. But they obviously get a vote, and how they vote dictates the financial model that's deployed and the financing that's deployed.
Got it. Related question, it says, does your company get to share in the tax credits, or do these go to the customer or MDU owner?
They go to whoever owns the assets.
Okay.
Yeah, you have to own the assets to get the tax credit. And in some cases, you can have multiple owners of the assets, but you've got one owner in there that takes the tax equity, that brings the financing and takes the tax equity out of the project. So it can get fairly complicated and inside baseball as far as the financial engineering that can go on. But at the end of the day, whoever owns the assets gets to take that credit.
Got it. That makes sense. Actually, this is a question about your company. How does your company make money? What's your sources of revenue in these projects?
Well, in the case of a property developer that wants to own the assets, we actually sell them the installed system. You know, if we're doing the installation or subcontracting out the installation, we would sell the entire installed system and put a margin on that. In the case of selling to a developer, let's say somebody comes to us and says, hey, I have this building, I want to develop this property, will you sell me your product? Then we become basically a hardware seller and probably sell some engineering services as part of that package, but we're not in charge of the construction. If there are cases where we're actually an owner of the project, or will be an owner for the project. So again, it can get kind of inside baseball on the financial engineering, but we're actually doing the Lend-Lease project as a sale leaseback financial model that allows somebody to come in and take all the tax credit and the benefits, tax benefits, but at the end of 6 years, we'll buy the project out from them and we'll take the cash flows years 7 through 25. So again, I call it rearranging the flowers. There's almost an infinite number of ways you can rearrange the flowers and do the financial engineering. So we have projects we own, we have projects where we just sell the hardware and engineering, and we have projects where we're selling the entire installed system, and we don't, you know, we make sure it's all commissioned and working and generating, and then we walk away and leave it to the landlord, except for probably an O&M contract, you know, to come back and regularly check it out and give it any service it needs.
Okay. He's back on HHE. Two questions. One, who owns Holu Hou Energy? And two, what are the forecast revenues for 23 and 24?
Okay, so this is a little bit sticky in that our 49% share owner is a public company, and so I can't get too into the weeds on that. But what I'll say is we're doing the first 800 units at the Aliamani property in 2024. And because of the tax credit and the sale leaseback structure, those 800 units are going to be worth approximately $80 million. Okay. So that's just that property for 2024.
Okay. Let's see if we've missed anything. What markets is HEG focused on currently?
We kind of cut our teeth in Hawaii because Hawaii is sort of the tip of the spear as far as a lot of the problems that are faced elsewhere in the country with grid and renewables and rates. And Hawaii kind of sees things before anywhere else. And, you know, California is very close behind Hawaii. So that made it an easy decision to start in Hawaii and then move to California. Beyond California, there's a lot of other states. I'm a part-time resident of Arizona. Arizona is doing a electricity rate increase of something like 15% this year. We've worked with people that are doing projects in Texas, modeling their properties. Anywhere in the country where you've got either a big intermittent grid problem or a problem with high electricity rates. I mean, where I am full-time is the San Luis Obispo area of California. I'm 10 miles at most from a nuclear power plant. So ideally, in a perfect world, that's the most stable source of electricity there is. It never goes out, doesn't get shut down, right? We have outages all the time, and it's because of the grid, not the generation. So intermittency, especially in California, you know, PG&E and the Bay Area, there's parts of the Bay Area that the power's gone out for 3 days in the last 3 years. So, you know, anywhere that's got those fundamental challenges or problems to deal with, we're interested in. Germany has much higher electricity rates, for example. There's a lot of potential markets. We've just chosen to focus on Hawaii first and California second because they're huge markets. But we would work with developers about anywhere where it made sense.
Okay. Related to California, it says the company has stated plans to penetrate the California MDU market. How close are you to securing an energy share project in the state?
We just this week, we sent a team to do a site walk on 3 different properties, because after you do this helioscope, you can see this helioscope without actually going to the site, right? You can get all of this without going to the site, and it gets you pretty close. But at the end of the day, you've got to go look at the buildings, make sure the roofs are in reasonable repair. If you've planned on using the carports, you have to make sure they're structurally okay. So just this week, we sent a team to look at 3 properties, 2 in the San Diego area and 1 in the Bay Area, over 800 units for the 3 properties. We already have a term sheet, but we were doing the physical inspection on those properties to start the work of how are we going to cluster, you know, how do we lay this out? How are we going to engineer it at those specific sites? So that's how close we are.
Got it. Here's a quick question. Somebody's excited about investing in you. Are you looking to raise capital anytime soon as HHE?
That's probably a separate 30-minute discussion, I'm thinking. So I'd probably have to take that offline. My email's in the press release.
Yeah.
Anybody can reach out that has a question like that.
Fair enough. And then how much dollars does your proprietary solution add to the typical price of a project installation? Is that something you disclosed, or?
Well, again, in general, there's two models, right? There's a model where we do the entire project for the building owner and we sub out the construction. There's also a model where a developer, we work through a developer, they come to us and they say, we just want your hardware. Those have totally different economics because we're only margining up the hardware in one case. The other case, we're margining the whole project and then paying somebody to do the construction. In general, and the costs of those two are totally different. One, for example, doesn't include construction and the solar modules and the racking and all of that. So the economics, the amount of dollars are totally different. The margins will maybe be similar. They're going to run in something like the 25 to 35% range, depending on the project.
Got it. Okay. Here's one last one. It says, I understand the HHE smart panel has been installed at various locations. Can you expand on this and on how this product has been received by the public and plans moving forward? And will there be other products released in the near future?
Okay, that's a good question. It's also relates to our single family home market. We do sell into that market. The smart AC panel is meant to go to homeowners. And what it allows homeowners is the opportunity to, through an app, prioritize loads in their home and move loads around. And this, who cares? Why does this matter? Well, as states get more into the tiered rate structures, usage rate structures, or time of use rate structures, you may not want your water heater, which if it's electric is 4,000 watts, coming on during the peak utility rate time of day. You may want to take that load and move it around because they'll actually retain hot water for quite a while. So you could do it 2 hours earlier than that rate. And you could set that through load control in our smart panel. You could set when your EV's charging if you don't want to charge your EV during the high usage period. So it's really geared towards a homeowner, and it's a phenomenally big market, but it's a bit different than what we're talking about with MDUs. It's a consumer product, basically. It's meant to be sold to anybody that can hire out an electrician to come put the panel in, and it's not in place of your main electric panel. It augments your main electric panel and can be installed by an electrician in probably a half a day. So it's a slick product, but it's in beta site right now. We have it installed in beta site. Because it's a consumer product, we're making sure the app works well. All the screens make sense. We need to make sure that when we put it out there, anybody can install it anywhere and they're not having to call us to say, how does this work? Or why is it doing this or that? So there's a different degree of robustness associated with it. We're going to be in beta test through probably the January, February timeframe, and then we'll start ramping up shipments. The question also said, are there any other new products? There's going to be a second version of this product at the end of next year, which has the capability for the utility, if the homeowner wants, to come in and manage loads or send signals to the home. So if the utility has a program to do, let's say, discharge your battery at certain times when the grid needs that electricity and they're going to pay you for that, somebody can hit your home with that signal and tell your battery discharge now into the load. So that's kind of a next generation version of the product that will be the end of next year. So again, it may be of use in MDUs, but probably that's a very small segment of MDUs. For the most part, it's a consumer product, doesn't have to be used with our energy storage system, can be, or not necessarily, can be a standalone product. So different product, kind of different market, but pretty exciting.
Yeah, thanks. One other question just came in. Can you set up your system on large 2-story retail strip malls?
That's a good question. So we will, most strip malls, a lot of strip malls are going to be using three-phase electric product, right? A lot of them have equipment and stuff that works off of three-phase. They're probably better served by a commercial scale system that's geared towards that. The exception being like that Santana Row property where it's mixed use. We definitely are going after those types of properties where there's residential units with commercial space underneath them. We're definitely targeting those. They need a different voltage because they use 208 volt. And we have to be able to deal with that with a different product, which we're working on.
Okay. Let's see. I think one more question here. Who is okay? How does the tenant billing work in these projects?
We have a third party we work with, and first of all, our product has metering on it so that you can meter everything that goes in or out of the cluster for every unit. So every unit we can meter what comes from other units in the cluster as well as what that unit consumes for its own generation. So our third party, what they do, and it's really slick, is they have the rate structures for almost every utility in California. And I'm not just talking about the big three, I'm talking about munis and others also. They have the rate structures modeled in, and they can actually pull our data off our system and generate a bill that looks exactly like the utility of that territory's bill structure. So if it's a place like SDG&E that's got summertime peak rates or what have you, if the landlord wants, they can mimic exactly the SDG&E bill for the electricity that comes off of our system and goes to any given tenant unit, and then email the bill to that tenant unit.
Got it. And then actually, there's a lot of questions today, Brad. Thanks for staying with us. There's says the question is, are there channels to the market or installation partners, or does someone have to go to HHE?
The answer is yes and no. Anybody that's installed solar on even a small commercial building is going to have the capability to install our system. And in a place like California, there's a lot of entities that do that and have done that and can do that. We don't want to hire construction. We don't want to directly hire construction people and build a construction entity. That's not our core competency. We're a product company at the end of the day. So we want to work with people that can do the construction. And fortunately, in most states, there's plenty of people that have the competency to do that construction. You wouldn't necessarily want somebody that just does residential units Two, you wouldn't necessarily want to pitch them right in, even though our system looks and behaves like a residential unit more than a big commercial battery, but it's really because of scale of the job, right? You want somebody that can manage a lot of resources, can get the project done. A 300 unit MDU property is a lot like a commercial building with respect to putting solar on. You know, you need a lot of people, you need to be able to manage schedule, that type of thing. So, but again, construction is easy to find, relatively speaking, and we will work with anybody that we qualify and can be trained on the product to be able to do that construction. We do it ourselves in some cases, but even in Hawaii, in most cases, we're working through an existing solar EPC. EPC is engineering, procurement, construction, and we work with existing EPCs. We happen to do the E part, and the P part, they do the C part. So we're the prime, and then they do the construction.
Got it. Well, Brad, we've taken a lot of your time, and I really appreciate you jumping on with us today. I think we have exhausted most of the questions today. I would reserve the ability to possibly have you back on, since there was this much interest. And again, many of you know from the tribe, we've had people coming in from over 27 countries these days into these webinar events. So we're exciting. And this is a global opportunity here that you have in front of you, that you're just, taking a few steps forward here in Hawaii and California. So this is exciting to catch you at this time. Is there any parting words that you would have for those that have stuck with us here? We've got a pretty good group still here.
Yeah. Thanks for staying with us and your interest. It was really my pleasure to be able to share what we're doing with you. I hope you can feel the excitement we have about the opportunity. And John, I really appreciate you having me on. It was great.
Definitely. Well, thank you again. Note this, we will endeavor to get the event video published at the Tribe Public YouTube channel later today, as soon as possible. And so if you missed anything and you want to go back and reference that, a lot of great information here that might have, got past you, do that. Also, if you want to share it with anyone, you can share there by just going to that video. Also include you in our tribe this week, which I'll include this video in there, which goes out every Friday at about 1:15 Pacific. So you have access to that. So if any of your friends missed this, you think might be interested, you can share it with them as well. Thanks again, Brad. Thanks to the tribe, and look forward to being back on soon with you, Brad, and the company and others. And thank you, tribe, once again. Have a great rest of the day.
Thanks, everyone.